Hello and welcome to Moneycontrol. We had a very positive development on Friday, inclusion of India in the JPMorgan Global Bond Index. It's a huge positive and adds to the positive narrative around India's growth story and obviously an affirmation of India being an important investment destination. To talk about how this impacts our macros, our currency trajectory, our cost of borrowings, and the long-term growth story that India offers, I have with me a very special guest, Sanjeev Sanyal, Principal Economic Advisor to the Prime Minister. Sanjeev, thank you so much for your time today. So, first question, of course, what is your reaction to India getting included in the JP Morgan Global Bond Index? What do you see as the immediate benefits, if at all you see anything? More importantly, over the long, next 2-3 years, if you see out, how do you see this panning out? What kind of benefits do we see in terms of cost of borrowing, in terms of the currency trajectory, and any other macro benefits?
So let me say that this had been in the works for some time, as you know. For a few years, at least since I think 2019, we had been working on this, both on our side as well as on the side of the bond inclusion guys. So there were many small micro issues that had to be ironed out over a period of time. And so once that got done, of course, then they had to go back to their investors and ask them whether, and make sure everybody's on board and so on. So, it's an important part of the evolution of our internationalization of our financial system. And so this is good because right off the bat, we got a weightage of up to 10%, which accounts, as you know, for something like $24 billion. Yeah. And once you're in one, you typically end up in other indices as well. So once it's all done and dusted, we may get something like a 40, maybe even more $1 billion over the next couple of years. Now, this inflow is useful because it tends to be more stable. These are, remember, passive funds that are based on a certain weightage that is given by these bond inclusion people. JP Morgan itself, as I said, is quite big, but there are others like FTSE and there is Barclays, Bloomberg, and so on. Now, once you are in there, it means that there is a relatively stable pool of money that we have access to. It's not 100% stable, of course. If we don't manage our macro stability, then of course this will also whittle away. But by and large, it tends not to get thrown off too much by global storms of any kind. And so, a significant amount of money that we will have access to. Now, the second issue from the impact of that, of course, is that it makes it cheaper for the Indian government specifically, and more importantly, the economy in general, to access money. And so, in that sense, it makes it bond yields in India lower than they would have otherwise been. Now, I know there will be some attempts by some analysts to try and put a hard number to this. Let me warn people against doing this. It is actually it's not really possible to do it. But it will be a significant number. Whenever we are, exposed, we are able to analyze it, it will be a significant number.
At this point in time, Sanjeev, would it be possible to see what kind of benefits we could have on the currency? And I'll tell you why I'm asking this, because when we look at equity markets and foreign fund flows, one of the things that most foreign investors tell us is, what is part of the equation in investing in emerging markets is the currency risk. So even if you see high growth and you have, local returns are high, they have to constantly figure out, impute that 4 to 6% depreciation in the currency as part of the equation. Do you see that equation get changed, or people starting to look at it in a different way? Do you think actually we might be able to see some kind of a reversal or compression in that rate?
So first of all, let me say that just because of this one inclusion is not going to change the way we manage our exchange rate. We are now a large economy. Even $24 billion here or there is not going to change the trajectory of the exchange rate. We have, after all, more than $600 billion worth of foreign exchange reserves already. So let's not, act like this is going to change the game. This is an additional good news. That's all. So now, in that context, let me say that the Reserve Bank has had for a long time now a well-established way of managing the exchange rate, which is we basically allow it to find its own level, but do not allow it to move too fast in either direction. So basically, we lean against the wind and basically manage volatility in a sense. And we have more than adequate reserves for that purpose. So now, my view is that that particular way of managing the exchange rate has suited us well for a long time. There is no particular reason why we will change the way we do it. How will the rupee behave as a result of this? Well, it will continue to behave the way it does, which is over long periods of time, it sort of adjusts for real effective exchange rate. But do remember that the Indian rupee, since the imposition of the inflation targeting framework, the differential between our inflation rate and that of the rest of the world has become much, much narrower. So in the old days, we had to depreciate by some 4% every year against the dollar to maintain the real effective exchange rate. My sense is that that number is probably much smaller now, since we are no longer a high inflation country. In fact, for much of the last couple of years, our inflation was lower than that of many Western countries. So in that context, I would say that, we will continue to manage it the way we are managing it. But the result of it would mean that the rate at which we depreciate will probably now be lower than in the past.
Sure. So I'll come to that inflation and the related subjects in a minute. But before that, I want to slip in a question on growth. Obviously, it's wonderful that even for this year, RBI expects a forecast of 6.5% growth, and the consensus it's a little here or there of 6.5%. In your own what do you think is growth that we can forecast or think of for the next 2 to 3 years? I'm not only talking about this year. And what could be the big drivers of that growth?
So as the government has said, we expect growth somewhere in the range of 6.5% to 7%. I think we are on course for doing that. The first quarter came up at 7.7%. Yes, it's helped by statistical factors, but then those statistical factors will also even out over time. So yes, the headline number will come off, but that doesn't mean the economy is decelerating. If at all, our growth numbers are pretty robust. The monthly purchasing managers index are strong. There are large industries like, for example, travel and tourism that are booming. In fact, you probably have real difficulty getting yourself a hotel room these days anywhere in the country. Even from on the private sector side, you can see a significant investment is happening. We know that from companies that there is sustained. Even manufacturing is seeing investments going in, and of course the public sector's infrastructure push continues to happen. I mean, whether you live in Delhi or you live in Mumbai or any other city, you will be seeing construction everywhere all the time. So I don't think it requires too much imagination to see that our growth momentum is fairly robust. Now, in the medium term, we would like to grow at something like 8% on a sustained basis. Now, that is not possible this particular year because the rest of the world's growth dynamic is very weak. So, if we try to push for 8% growth this year, then we will unnecessarily stress our external accounts because our imports would go up, but our exports wouldn't. So under those circumstances, I think 6.5% to 7% growth is good. Longer term, it will obviously depend on what happens in the rest of the world. Our own supply side is capable of managing 8% on a sustained basis. It's no longer the case that our infrastructure would blow up if we try to push growth. Our banking system is now clean and is capable of sustaining 8% growth. And so on and so forth. So our systems internally are now capable of driving 8% GDP growth rate. Now, whether or not we actually hit those numbers and sustain it now depends largely on whether the external environment allows us to do that, because obviously if we grow at 8%, we will import more. And the external environment must be such that we should be able to also export more.
Sure. No, the reason I asked that question is if you look at the past 2, 3 years, actually post-COVID, much of the heavy lifting clearly has been done by the government, especially in the last 1 or 2 years. Public expenditure has gone up. Now, do you think that will have to, at some point in time, of course, the finance minister has also made statements in the past that at some point private capex will have to come in and do the heavy lifting. But as we all know, businesses, unless they see very vibrant growth, their ability, they will be, they won't put in the money before they see demand growth.
So here, let me disagree with you.
Okay.
Let me disagree with you. I think growth momentum at 6.5% to 7% is pretty good. All the companies are making massive profits. Their capacities utilization has gone up very significantly. I cannot see why companies would not be investing. In fact, from every meeting I have with the private sector, I gather that the private sector either is already investing or will shortly be investing. So I don't think this
no,
is
that's
the private
I'm
sector
not disputing it's happening
anymore.
No, I'm not disputing it is happening or not. My question was that the next leg of growth will be driven by private sector.
Of course, mostly growth is driven by private sector. The government can lean against the wind sometimes. And of course, government needs to invest in infrastructure, which we are doing and we'll do more of. But ultimately, yes, the real kicker in the growth has to come from the private sector, and the private sector is doing their bit.
Sure. The other question is you talked about an 8% growth being our trend growth. So would you believe that 8% is our sustainable trend growth?
See, first of all, I don't believe in equilibrium. So it's a wrong idea for you to even talk about trend growth. There is no such thing. I think the economy can sustain 8% growth when the conditions are conducive externally. That's the point I'm making. But there is no such thing as trend growth. That's a misnomer some old style economists used to use. Those are outdated ideas.
Okay. Again, I think that the next question also stems from that, which is that, there was, and I'm referring to some old school only, but please do feel free to correct me, is that there has been this belief that, if we outdo a 6.5-7% growth, it tends to be inflationary for the Indian economy. My question to you is, do you think with 8% growth, a 4% inflation target is reasonable?
Yes, it is. That is precisely the point I'm making to you. While there isn't such a thing as trend growth, you can have a sense of what is your supply side's capability of driving growth on a sustained basis. And that is why I told you that our supply side is capable of doing 8% on a sustained basis. That is what I'm trying to tell you. So the trend growth business is nonsense, but you can say, if you take a supply side view of the world, is your economy capable of growing at 10%? Yes, it is.
Fair enough. Okay, Sanjeev, I saw your paper on decriminalization, and just elaborate. It's very interesting because a whole bunch of business people out here have been talking about this for a long time. That it's high time that we sort of rationalized this a bit. Some of the provisions are very harsh and so on. Tell us about the working paper that you just presented, and any other reform. You talked about process reforms. What does this constitute, and how do you see this alter the business today?
Well, most of the reforms that everybody likes talking about tend to be what are called structural reforms. What happens is that you change the framework of the functioning of the economy in some fashion. Those are structural reforms. So whether in 91 you opened up and got rid of licensing, that's a structural reform. Introducing inflation targeting framework, that's a structural reform. GST is a structural reform. Insolvency and bankruptcy code is a structural reform because these create frameworks for functioning. But there is a whole new class of reforms which don't change the way the framework works. Instead, it uses the same framework, but basically improves the functioning or efficiency of that framework. Now, those reforms are called process reforms, and they are usually rather boring reforms, nuts and bolts reforms, changing a rule here, changing a process there. But cumulatively, they are at least as important, if not more important in the long run, than the framework reforms. So what is happening now is that we are paying a lot of attention to these process reforms, and the working paper that you just mentioned is really about doing something about the legal metrology. So legal metrology laws in India relate to the laws relating to weights, measures, labeling, and so on. And the point being made there is that there are serious problems with those laws. They are unclear. There is unnecessarily criminalization. There is lots of scope for rent seeking by officials, and so on and so forth. And the case we make is that, look, we can make it a lot better while balancing, by the way, consumer requirement interests as well. And we can make the whole system much better. So the paper basically makes the case for dramatically improving the legal metrology laws, which have been around for some years, and have been a source of major harassment and causing problems with ease of doing business. But as I mentioned, it's only one. We have been dramatically trying to expand the capacity of the patenting and system in the country, for example, and you should be able to, in the next 12 to 18 months, you should be able to see the benefits of that. We are basically tripling to quadrupling the capacity of our patent office. We are doing many such other reforms as well. So, I could give you a long list, but basically, one by one, we are doing these kinds of reforms.
Can you expound on two or three that you think fundamentally change something substantial in improving business sentiment or foreign investments?
I'll give you two examples. One that has already happened and one that we are in the process of doing. And of course, I already talked about legal metrology that we will do in the future. So one that we did, which in fact we did during COVID, and was something called OSP reforms, other service providers. Now again, as I told you, process reforms is going in there and changing relatively small, minor, obscure laws, which have disproportionate impact on efficiency of sector. So we, as you know, have a big BPO and IT-enabled services exports industry, right? It's a big industry in India. That the BPO ITES industry, unfortunately, till 2020-21, was burdened by these really outdated laws imposed by the telecom ministry, which required them to, effectively what it meant is that work from home was actually illegal. I don't think people realize this, but till 21, effectively working from home was illegal. And while the individual person working from home may not have been bothered by it, but if you wanted to create a company based on this or any large system based on it, then all kinds of rules and regulations would be imposed on you. You would be fined and so on. And you had bizarre ideas. For example, if you work from home, you were supposed to have an EPA-BX machine in your basement. Just as an example. So now I happened to bump into this entirely by chance, as it happened to be, because the telecom ministry, in the height of COVID, issued a notification saying that these laws were going to be held in abeyance till December 2020, which immediately raised my hackles because it meant that these laws were normally applicable. So the moment I discovered this, I then wrote a few notes on how to get rid of them, and we did get rid of them. And so eventually all these obscure telecom regulations, which if you ask people in the BPO industry, the ITES industry will tell you, is to consume as much as 60 to 70% of management time of these BPOs and ITES industry, they suddenly were removed. They ceased to exist. And so now we have a much more open system. And the result of that is that in the year 21, 22, into the beginning of this year, we saw massive expansion in the IT-enabled service industry. It slowed down in recent months, but for about a 2-year period, it went through massive expansion. It was possible basically because of the OSP reforms. So just as an example of obscure laws, which can really stall a major industry, right. And when you remove it, you just get this massive expansion.
Right.
Similarly, we are also doing something with patents. Now, we all want to be, think of India as Vishwaguru, and we want to be in the knowledge industry and so on. But the fact is that till 2016, we used to only issue 9,000 patents a year. And after a lot of effort, now we are issuing about 35,000 patents a year. Now, that's a huge improvement from 9,000 to 35,000, but let me put it in context. America does 350,000 patents a year, and China does about 500,000 patents a year.
Right.
Even if you discount the fact that many of Chinese patents are poor quality, they're still doing at least 100,000 worth of good quality patents. So in that context, let me say that we need to be also doing at least 100,000 patents a year, 1 lakh patents a year, but we need a capacity of our patent office to do it. So last year we wrote a report on this from PM-EAC, and then that was accepted by DPIIT, the ministry that runs the patent office. And now what is happening is that the processes are not only being changed, but we are hiring something like 500 new patent officers. So they are in the process of being hired as we speak. In the next few months, they'll be hired, then they'll be trained. So by the first or second quarter of next year, our patent office will be dramatically bigger than it is today. Sure. And by the end of, say, in 18 months' time, we will have the capability of doing about 1 lakh patents a year.
And when do we expect to see 1 lakh patents a year?
Maybe by 25, 26, the year 25, 26, we should be. That's not so far away.
Yeah, wonderful. Okay, coming back to some more financial questions. So there was this data by RBI, I think last week or the week before last, saying that net financial savings has hit a 47-year low. This sounds very alarmist, but is it? The other piece of data was also that household financial liabilities is at a 2-decadal high. Do you think these can really pose a threat in terms of financing growth?
No. I think that is not how things work. What we ultimately care about is household savings and overall national savings going up or down. And the evidence in that is clear. Savings rate in India is going up. The proportion of that savings that is in financial has gone down. It is true. That is because many people are borrowing to build homes, and building, sort of upgrading homes is a natural thing to do as you become a little bit richer. So you're going from kacha houses to pakka houses, taking advantage of the Prime Minister's PM-Awas Yojana, the PM-Awas Yojana, and all of this. So not surprisingly, there is a shift in household savings from financial savings to physical savings. But in my view, that is not a bad thing. And if the financial system wants to attract these people back, then they need to find ways of getting them better insurance products, getting them better savings products, and so on.
Fair enough.
Why should if households want to save, they will decide how much to save. The exact way in which they save is up to the households. And if the financial system thinks it wants to wean away more people towards it, then let the financial system compete in the market.
Fair enough. So do you see government taking to privatization of assets from here on? Because what we see, and even this year, for example, the route that is commonly taken is stake sale. Not necessarily through privatization. Of course, Air India has happened, but what is stopping this? Can it happen? Is that a better way to create value for the assets that we have? What are your thoughts?
So we do it opportunistically. It's not that it's an ideological point. Whatever sells at which point in time, whatever is convenient, we will sell. We didn't just sell Air India. We also listed LIC, if you remember. Now, I don't think we can sell LIC. It's such a large company. So we listed it. And what will happen is that it will also mean that the management in LIC will get used to being listed. It takes some time to be able to deal with market scrutiny. It's not something everybody is used to. So it requires some time to get a company there, let them get used to the market. The market also gets to know them, and so on and so forth. And then, you'll take it from there. And by the way, we are quite happy to retain certain amount of public sector in some sectors like finance and so on. We intend to retain a certain amount of, public sector banks in the system. And as you've seen, the public sector banks have now dramatically improved their performance. So they are doing well. But we have listed them so that market scrutiny remains on them.
True, that is true. So this is the last question, because one of the things, as you know, all the public sector companies have done exceptionally well post-COVID. Even in the markets, markets also have taken fancy to public sector companies. Somewhere the value that was embedded in them is getting recognized. Just last week when the OFS was launched for one of the public sector companies, the stock actually went down 10%, but because the stake sale price was at a good 15-20% discount to the market price. So there is a feeling among market participants that the promoter out here, the government of India, is undervaluing their own assets while doing these stake sales. How do you think this gap can be bridged?
The only way you can find out the true value of a thing is to sell it. Then there is a market value for it. Then we own the rest of it. It will eventually get, you can take advantage of it. This is there is no valuation model that tells you a number till you have actually put it in the market. So the only way to do it is to put it in the market.
Fair enough. All right, Sanjeev, thank you so much for your time today. Look forward to more conversations.
Okay, see you.